Hello to all the Web3 enthusiasts out there. This is Max speaking, and welcome to the new exciting episode of Synopsis. I would say this one is going to be special because our today's guest is extremely well known across the industry, and I believe that most of you guys know him through his numerous videos on YouTube. Please welcome Kyle Chasse, the chairman and founder of MV Global. Hi, Kyle. How are you today? I'm good as well, thank you. So today I would say we have 50-60% more questions than usually because the entire team was excited to see you here. So there will be kind of a mix of questions, but I do believe that you will deal with it easily and it will be an insightful, interesting, and easygoing discussion. So let's just start shooting these questions. Well, to begin with, it will be very interesting to know a story from the past. So could you please tell us of how you came across Bitcoin in 2012? This is a way ahead of the crowd, so it's interesting to know more.
Sure. Yeah, I mean, the first time I heard about Bitcoin was from Silk Road. And, this is, it was fascinating, I think, most people that got into Bitcoin in 2012, I would say majority were through the same routes, whether they will publicly say it or not. I think what Ross did with Silk Road was like very innovative. It was illegal, but he served his time and now is free man. And I'm very thankful for him bringing it to a lot of our attention. And so that's how I first came across it. But it was so 2012 was when I first learned about it, but it wasn't at that time. I was just even more fascinated with that. At the same time, I learned about Bitcoin. I learned about the dark web. I learned about Silk Road and Bitcoin and encryption, all of this new stuff all at once. And I just couldn't believe there was like this eBay, for illegal things on this thing called the dark web. So it was all a lot to take in at one time. But it was 2013 that I really went down the Bitcoin rabbit hole when I learned what WikiLeaks was doing with it, how they were using it to accept donations, and to continue their fight. And so that was what let me understand how much potential there was with it,
Wow. So you didn't miss a great opportunity. Awesome. And the next question is actually arising from this one. Could you please tell us what is your secret to discovering disruptive technology early on?
Well, I guess, I'm just very curious, and I think that, so I guess you can take that question a lot of different ways. For me, as an investor, I guess I'll take that question as like, how do I find new, innovative, disruptive technologies that are interesting enough for me to maybe invest into and be part of their success or their journey. And it's just looking for anything that can be disrupted by what blockchain invented and Satoshi kind of invented. So those are just all kinds of different ideas. Originally it was, okay, so Bitcoin came along and then that was disruptive for, it tried to be a peer-to-peer digital cash and that didn't work out. And, there was this big debate in the Bitcoin community, whether Bitcoin should be scalable and larger, a larger blockchain, or if it should remain small. And it remained small. And so we got this narrative of of a store of value, a digital gold. And then came smart contracts. And then while there was a lot of interest in figuring out what kind of applications would be built with smart contracts, I think first what we've seen so far is only till today. Smart contracts first came out in 2015 and we're in 2025 now. So it took 10 years to further refine the smart contract layer because we haven't really had a massive use case outside of stablecoins on this programmable layer. And so, but I think that now with generation 1, 2, and 3 of blockchains, which you'd say Bitcoin, Ethereum, and then things like Solana and Sui, for example, are the third generation of blockchains, which are faster, cheaper, maybe slightly less decentralized than Ethereum, for example. Now that we have smart contract platforms built and ready for users, because we've gone a long way in abstracting the difficulty of the blockchain away from the end user, which is important for adoption. Now we can focus on, okay, what kind of applications will be built on top of these things? And I think we're seeing a pretty interesting adoption rate with DeFi, things like Hyperliquid, Aave, these kind of things that are being used. Aave has like $56 billion of value locked in the protocol, which is mind blowing. This is more than some regional banks, for example.
Yeah.
But now it's on to okay. So what else can we do with this programmable smart contracts? And I don't know. I just look for really interesting founders who are can convince me that what they're doing is new and novel and interesting. And I think that that's what I look for.
Awesome.
It comes like from a natural curiosity, healthy curiosity. So just not about looking for something what gives 100x on purpose, just being curious and digging deeper.
Sounds like
for some reason maybe something obvious, but
when you think deeper about
if you think deeper about this, this is the key factor.
So
everything comes from this.
And as you mentioned,
when discovering learning more about Bitcoin in 2012, like it was connected with the dark web, with something illegal
and stuff like this. So
now the crypto adoption is increasing, and
actually,
it seems
I would say that
a small number of large scale players nowadays control everything, and the industry is losing its decentralization. Actually. So, Kyle, do you think it will ever be decentralized again?
Well, I'm not sure that. So, which part do you think is being lost? The decentralized part. What are you referring to?
Well, it seems like the big players, institutions, big funds, and everyone is talking about them getting on board and trying to control as much share of the market as possible, like weekly purchases of Bitcoin by Strategy, for example, and others.
Many other examples.
Yeah, right. But just because they're buying a lot of Bitcoin and Ethereum doesn't mean that they're controlling the underlying protocol, which is the decentralized part, right? So, I mean, I think there's often a misconception that just because corporations and the ultra elite, the super rich, and governments are starting to acquire Bitcoin and Ethereum, that somehow this is centralizing the control of it, which it's not. It's it's still these tokens still run on decentralized infrastructure. Bitcoin's a good example of one of the most decentralized, if not the most. It is the most decentralized network in the world. And then some people say that, okay, well, you've got folks like BlackRock and others that are coming in and buying large stakes in the mining companies who are actually the ones controlling the network, and that's true, but they don't own controlling ownerships, right? They're just investing in these mining companies because they want more exposure to the crypto ecosystem and to try to make money off of anything that's profitable. So I think that we already are in a, like, that's the beautiful thing about Bitcoin, is that it was given time to, no one really took it seriously for a very long time, which means it took a long time. And more people coming online to secure the network in a decentralized fashion, that it made it so strong and resilient to centralized attacks and centralized control. And that's where we are today, as the underlying protocols are still very decentralized. Like, you couldn't, no one, even if you had a coordinated attack from different nation states, you still couldn't take down Bitcoin or Ethereum, for example, and probably not even Solana or Cardano or other infrastructure. So the infrastructure still remains, strongly decentralized, in my opinion, and I think that's a very good thing. We're resilient. The question, if you're asking, like, I mean, yeah, so we're still in a good shape to where these blockchains are permissionless. Anyone can build on them, and people can create things that are governed in a decentralized fashion, or they can create things that are governed in a centralized fashion. And then people have the right to choose what ecosystem they participate in, whether they participate in the centralized ones that are being built by banks and built by the incumbents, or whether they choose to participate in the ones that are very decentralized, like something like Aave, for example.
Okay, awesome. So sounds like no actual threat to decentralization, at least so far. And I think that if not a major, but some part of our audience felt relief right now. So I did also. And now let's speak more about the innovative side of the story. So Kyle, could you share your opinion about areas that where the biggest Web3 innovations are happening right now?
Well, I think that DeFi is the one that's going to be adopted the first, and so I've had to recalibrate, my like kind of where I am, because if you've been in this space for a long time, you understand, the potential of what you can do with decentralized technology, but the rest of the world is kind of just getting on board, right? They're only very kind of recently starting to feel comfortable with Bitcoin, and only very recently starting to kind of think, okay, well, what is Ethereum and how does it work? And so we have to take ourselves back to the frame of mind that we had when we were first learning about this stuff, and like DeFi became the first apparent use case for this kind of decentralized technology. And so I think that DeFi will be the first thing that's massively kind of adopted by most people, and that's threatening things like banks and things like that. So I think that, and then you have this kind of hybrid approach where you have these centralized institutions who are using blockchain to upgrade their existing infrastructure. So you've got things like Chainlink and others that are helping, things like Swift and other settlement pathways, or XRP, for example, who's helping like MoneyGram and Western Union update their payment systems. Also, MasterCard and Visa integrating blockchain for their settlements as well. So you have these centralized institutions upgrading their existing legacy infrastructure with blockchain technology, and so these things are all kind of what we see in the headlines right now. They're not so interesting to me, but it from a pure disruption perspective, but they're a good sign that adoption is happening. So we just have to think that they're moving a bit slower than maybe we would like to see, but I still think it's a good signal for the ecosystem as a whole.
Awesome. And speaking about the things that you actually like, could you please share what industry trends do you follow most closely?
Well, I mean, for me, the most interesting. So I'm a builder, right? And so what I'm focused on is I'm focused on crowdfunding and opening access, because I think there was something about the idea. Back in the day, we used to the tagline, or the crypto industry slogan that we used to use a lot was "banking the unbanked," and that sounds kind of a bit cheesy today, but giving access to the 99%, what was only afforded to the very wealthy before, was something that I was always interested in, something that we're working on as well. And so for me, I'm not paying too much attention to what everyone else is doing. I'm only focused on really what we're building. And, we're building platforms at Paid and Commonwealth to allow everyday people, retail investors, to go ahead and have access to kind of opportunities that previously weren't, that they couldn't get access to. So I like crowdfunding, capital formation, these kind of things. And that's what I'm really focused on.
Thanks for sharing. And a little bit later, we will speak about, hopefully, a little bit more about insights. And what I want to ask you now is about the industry right now in general. So in your opinion, what are the best and the worst developed pieces of Web3 infrastructure right now? So what is already on a high enough level, and what should be improved and improved? Yeah.
I mean, well, I think we touched on this earlier before. I think that we already have great, so what's great is these layer 1 blockchains that all the future applications we built on have pretty much matured. I mean, they're still working on becoming even better. When you talk to or listen to the founders of Solana, for example, even though they built a phenomenal layer 1 network that's cheap and fast and hasn't gone down at all in about a year, even with things like the Trump coin launch, which brought billions and billions and billions of dollars of volume and transactions in just like hours. But they still want to improve. They're still trying to work on Fire Dancer and other things like that. So I think, that's really great. One of the things that was bad a couple of years ago was okay a year ago and getting much better today, but still needs some work, is just the user experience and just making things feel more like Web 2 for the new participants that come into the market. So, and these things are getting built, like chain abstraction, wallet abstraction, the blockchain abstraction kind of aspect.
Awesome. And if we apply these discussions about adoption and development to the real world and the current state of the market, so in your opinion, what regions of the world have the biggest potential in Web3 development and adoption? Are these developed or emerging economies, and why?
Well, you see the biggest adoption in the countries that need it the most. So, Argentina, Zimbabwe, Nigeria, countries where their fiat currencies are being debased or hyperinflated away at a very quick rate. That's where you see it the most. Right? And then you see, because people have a desperate need to get out of their local currency into something that retains value more. That's why stable coins are, very powerful, and dollar-denominated stable coins. People want the dollar compared to their local currency, and so that's what you see the biggest adoption from a real need. And then you have countries like Dubai, who have been forefront from innovation on the development side and creating favorable laws. And then now you have the United States, which is creating favorable laws as well.
I see. Firstly, everyone was speaking about the unbanked regions and the real need coming from them. And now we see things going global, and now we're speaking about different types of countries, and everyone has their own needs and perspectives. Awesome. And of course, we could not but speak about some investments. And the next questions would be about some personal assets, if you don't mind. So could you please share, do you personally have more assets invested in traditional instruments or Web3 ones? And what are your risk profile and your strategy to grow the portfolio?
So I made, I traded, all of my cash in for Bitcoin in 2013, and then around 2000, starting in late 2015 until 2019, I made several investments into crypto infrastructure, so like Coinbase and Kraken and Ripple and Circle, things like that. And those are great investments. They're still great. But had I left my money in Bitcoin versus making those investments, it would have outperformed those investments and it would have been easier and less headache. But and since then, all my investments have been in Web3. But just recently, we're seeing, the private equity markets haven't been super exciting the past 4 years or something. They've been kind of slow. We've seen less IPOs, less chances for exits. But this year they started coming back, and we're seeing IPOs being exciting again, and we're seeing kind of this new rapid evolution in new startups with the advent of AI and a lot of stuff that's happened in the first couple months of the Trump administration, where one of Trump's big things was to remove a lot of the regulatory hurdles for different innovative companies to come to market. So he's made it easier, for example, for nuclear energy to get permits, and to that industry was having a lot of trouble for a long time moving forward, and he's ripped off a lot of the tape from there. AI, robotics, supersonic passenger travel, just a few of the industries that are really interesting, that you're seeing these pretty rapidly growing valuations from seed rounds to public rounds. And so those are kind of getting exciting for me again. And one of the ones that we're looking at right now is a nuclear deal from a company called Hadron, which is really interesting. And so, yeah, but most of my net worth is in crypto assets and investing into crypto companies.
Great. Thanks for sharing. And the next few questions will be also about investments, actually, of course, about master ventures. So the first one, the investment paradigm of master ventures has changed from protocol versus app to infrastructure vs modular services in 2024 to 25. Why did it happen? Hope you get it.
Sorry, I didn't catch your question. What happened?
Let me repeat. So the investment paradigm of master venture has changed from protocol versus app to infrastructure versus modular services. Why did it happen? Why did this shift?
Not really.
Not really.
Oh, not really.
No. Well, we've I think we've always had a pretty generalized approach to our portfolio, as far as, we invest in all kinds of things. Just depends on what it is. We haven't really changed the thesis. It's always been a kind of, we look for awesome founders with great ideas and back them.
Okay, get it. So thanks for clarifying. And the next thing will be finally about regulations. Actually, about half a year ago, it was pretty difficult to speak with our guests about regulations. Now it's not even like as something outstanding, but still have to ask at least one touch this topic. So the question is the following: what piece of Web3 related regulation would make the work of master ventures the easiest? What would you improve in this field?
Well, we see some of that in the Clarity Act, which is going through Congress right now and just passed the House. And because I told you that we're working on crowdfunding and capital formation, one of the things that I think has been very, very prohibitive for what we're doing is this accredited investor law, where, in order to invest in primary market companies, or private equity or private tokens, you must be accredited investor in the United States. And that's been very prohibitive to a lot of people, to most of the Americans. And I'd like to see that change. And so it does seem like maybe we'll get some relief there, but maybe not until it becomes law. So for me, that's the most interesting is, how do we open up access to 99%?
Okay, awesome. And we're getting closer to the final part of today's podcast. And for the end, I have two more questions, most interesting, I would say, especially for me personally. So the first one, a very interesting to know from the natural born investor. Could you please share what is, in your opinion, the most undervalued niche in Web3 right now? So what should we keep an eye on? Of course, not a financial advice, but still something the market is being missing.
Well, I think that there was a pretty clear signal today and yesterday. I think the prices of NFTs like Bored Apes and CryptoPunk started going up again. And I think a lot of people were wondering if they were going to die totally or if they would actually make a comeback this cycle. You start to see the prices go up, which tells me that we're going to have we're probably going to have a more normal cycle than maybe we thought, you know. And so one of the sectors that has done well in previous cycles that is completely still massively down, that hasn't had a pump at all this whole cycle, is gaming. So projects like Gunzilla, there's another one that launched recently, Arcade, Cross the Ages, you know, really strong games that are way down from their all-time highs. And I think that game is one of the easiest things for retail to understand, and it hasn't had a pump yet. So I think that that's a massively undervalued and probably going to pump pretty soon, I think, but not financial advice, of course.
Of course. And yeah, that's pretty interesting how you say that the signal is obvious, although for many there might be numerous interpretations of this. For some, it might be even positive, but it's very interesting to see how you count it. And yeah, we've been talking about NFTs, the prices of at least expectations for the NFT technologies to die or not. And it's very interesting to see how the interest is getting back. And yeah, thanks for sharing your ideas on this. And we came up to the last traditional part of our podcast, and pretty valuable to hear some piece of advice, some call to action for our viewers, just addressed directly. And it's an open question, just any ideas, what should we hear right now, what should we keep in mind? So please go ahead.
Well, I think that it's important to stay educated and also do your own research and learn how to do your own research. You know, I make YouTube videos Monday through Friday talking about the macro environment, how the market cycles work, you know, how Wall Street's working and how it's influencing our crypto markets. And you know, I'm really proud of the content that we put out. We have a big research team. We put a lot of effort into it, and you know, you get a lot of information watching it. And I think that everyone who's watching needs to make sure that they, you know, but you don't put too much, like, don't just trust anything that anyone else says. You must be responsible for the actions that you make, and you must do your own research. And that's important because, you know, you'll learn your lessons. The market is unforgiving. It's brutal. And the only one responsible for the decisions that you make are yourself. And so I think that, yeah, I think that's the most important thing, is that people should just really do as much research as possible, and before putting a bunch of money into some meme coin because some guy on TikTok said it's going to go 100x, you know, make sure that you understand what you're doing, because you're coming to the casino, and in this casino, the house wins way more than Vegas does. So, you know, if people watching this want to go play in the meme coin casino, they can understand the odds are highly stacked against you. You know, that's a different game. You're not an investor if you're playing the casino. You're just a gambler. Now, if you want to go and learn about different projects that are launching on platforms like we're building, you know, Paid Network or Commonwealth, you know, then we put out enough information where people can actually go do their own research and see if they want to invest in something that's being offered on one of these platforms, which I think of still risky for sure. But less risk than just gambling on, on meme coins. So yeah, that's it. And then I think, building conviction over, I think another thing too that's important is always to use a barbell strategy. And so that barbell strategy is, something like 85 or 80% of your portfolio is in more secure blue chip things like Bitcoin, Ethereum, Solana, Sui, for example. And then, 10 to 20% would be in your more, this is money that you're definitely willing to lose. It's in higher risk, high reward kind of opportunities. And these are the things that can easily go to zero, but they can also easily do 20, 30, 40, 50, 100x in the bull market.
Awesome. Just awesome. Thank you for repeating these basic things that people might be missing. Of course, it's very important to be educated, and besides just doing your own research, learn how to do this research. And yeah, guys, there was a clear call to action. So Kyle is doing really great content. If you don't follow, I don't know what you are doing. So don't waste time. Subscribe to Kyle's YouTube. The production is extremely high level. Also follow Synopsis. Yeah, don't miss the big things. For today, that's it. Thank you very much, Kyle. Hope to see you in more episodes. This was kind of introductory with a bunch of questions from many spheres. Next time it will be more structured. And thanks for dealing with it.
Okay, thank you guys. Bye-bye.
Yeah, stay safe, everyone. Bye-bye.